This is how I made $293 trading the NASDAQ today. So if we look at the NASDAQ chart, the first thing you'll notice is that we had an extremely large sell-off yesterday, around 845 points going into trading today. So that was a huge sell-off, which at this point we're coming off of all-time highs. And it now looked like the market was potentially seeking the liquidity down at these lows at 678. But we did have some internal liquidity. Before that, we had a 1-day buy side imbalance, sell side inefficiency, fair value gap that the market traded into and then completely enclosed going into trading today. So if we go into our hourly chart, you can see that we had a huge 1 hour sell side imbalance, buy side inefficiency, fair value gap here that we were now trading into, right? With consequent encroachment right above us at 21,709. So going into the day, I was potentially watching us to trade a little higher before price went lower. So when the market opened, we did trade a little bit higher, as you can see by this wick. But we did essentially form a good range here off of this impulse move from 12 a.m. to the high at 9 a.m. So that essentially formed a good range to play off for our shorts today to target any potential sell side liquidity below us. I generally like to play short above the 50% level of any range. Going into today, I was looking to take shorts at or above the 21,565 level, targeting any liquidity lower. So as far as targets, we had this 1 hour buy side imbalance, sell side inefficiency, fair value gap that potentially the market could reverse from. So that would be a good target. And then we did also obviously have the liquidity down here at the lows from the Asia session. So going into our 10 a.m. hour, this is kind of how the market was looking. So we had the liquidity that was taken at these highs from the AM session in the New York AM session. And then we did also have some liquidity at these lows here from the London session. So we had sell side liquidity below us and we had buy side liquidity taken already. So now going into the 10 a.m. hour, I was looking for some sort of PD array or premium array to form at 21,565 or above, right? So a bearish fair value gap, an inversion, a bearish order block, something like that. So you can see going into this 10 a.m., the market did trade lower and then we did trade below into our discount of the range and ultimately came back up. But then the market from here did form a fair value gap, a bearish fair value gap at this 21,565 level. So now I knew potentially the market could retest this fair value gap and then potentially trade lower into this sell side liquidity or this internal liquidity at the 1 hour buy side imbalance, sell side inefficiency, fair value gap. So I entered with 5 here, with my stop loss above here, targeting these lows here. And you can see the market then traded higher. We retested the sell side imbalance, buy side inefficiency, fair value gap, and the premium of our range, and then traded lower into the 1 hour gap, which is this green line here. And then ultimately we did take the liquidity here. Now, I'm not going to lie. I didn't take any partials here. I didn't move my stop loss, which was a mistake on my end. So this trade did end up coming back higher and it ended up stopping me out right around here. So I did end up losing this trade. I lost about $240 on that trade. And so at this point now, I was looking for another opportunity to enter short when the market got back near this 50% level. But what I did notice is we did form a new dealing range, right? A dealing range is any price run that takes out the highs and lows, right? So if you look, you see that these highs from the morning session were taken out here at 9:30 a.m. And then these London lows, all this liquidity here was taken out just on this move here at 10 a.m. So that essentially formed a range for us to play short off of. So I put a Fibonacci there, and this was the 50% level of the dealing range. So now the market then traded higher. We tapped back into that 50% of the dealing range and then traded back into a premium. And at this point, I'm kind of just watching, seeing what the market wants to do. We trade back into the discount of the dealing range. Then we do trade higher from here. And then we form an order block here, right? These three down close candles, these three up close candles formed an order block. So I was potentially going to take an entry off of this. I was going to take an entry here, targeting with my stop loss above these three down close candles, targeting these lows now here. But I missed this entry. It just happened too quickly. It did retest here, it retested here and then kept going. So I did miss that entry. So I knew at this point I still had this 50% level to try to make an entry or play an entry off of. So I was watching to see what the market was going to do here. And then we did ultimately form this 1 minute sell side imbalance, buy side inefficiency here, that now we had consequent encroachment right above the 50% level of this 21,565 range. So the market did trade higher into this, and I ended up taking an entry right around here at 565 with my stop loss above here, because this gap should not get filled. This fair value gap shouldn't get filled because it's a breakaway gap. Targeting now these lows here at 565 or potentially even here at 515, because that was now our new internal liquidity. So the market then from there, we traded lower, and this trade was pretty much immediately in profit. And I ended up selling it here for around $550, making back the loss I had earlier, which put me at about $300 for the day. So you can see you lose 250, you make 550, and then you're green for the day. The key is your winners need to be bigger than your losers. As long as you're managing risk and your winners are bigger than your losers, you will have a profitable trading system.